All right, we want to welcome everybody that has joined us now. Thanks so much for joining us today. I am Spencer Chipping with the Crown Council, and this is our live podcast that we're hosting, even a couple a day right now with our trusted resource partners. Today, we have Drew Hinrich with Engage Advisors on, and I would like to just introduce the format for the meeting today. So being that we are live, Drew is going to walk us through basically the title of what you saw today's meeting is on, and we're going to be able to pause and ask Drew questions throughout his presentation. Truly, this is a Q&A format, even from the get-go. So if you were to type a question, I will see it on my screen and I'll ask it to Drew. Or if you just want to interrupt any of us and just throw out a question, Drew is ready. So Engage Advisors is a longtime Crown Council resource partner. And Drew has been extremely busy answering. Drew is a CPA. So in his line of work, as all of us on the call today know, Drew's busy right now. And
not as busy as bankers.
Drew is who you talk to before you oftentimes talk to your banker to get the correct advice, as well as the planning before and after. Drew, take a second, introduce Engage Advisors, your business, and let's get going right off the bat with some of the most frequently asked questions that are pouring into Engage Advisors and some of your recommendations around them.
Yeah, no, thank you so much. And so ultimately, we're CPA and advisory firm. We help dentists with all facets of financial aspects. And so tax, accounting, payroll, advisory work, financial planning, insurance negotiations, employee benefits, insurance, property casualty, life disability, the whole nine. So pretty much anything and everything that a dentist may need from a financial perspective outside of lending, we can help with in a lot of cases. So that is us in a nutshell, is really to help dentists navigate to make the best business decisions they possibly can for their practice at any given time, whatever that may be. When we were going through our rebrand earlier, late last year into earlier this year, and we were coming up with, okay, here's what we do. Really, we help dentists make the best business decisions for their practice. Like nobody would have ever thought how we were going to be putting this to work so quickly in 2020 and so deeply in 2020 right off the bat. So it's been an interesting time, a trying time, but definitely a time that we've been able to help our clients, as many people as we possibly can outside of our existing client base as well, answer a lot of their questions, calm a lot of their fears. Just wade through a lot of the misinformation that's out there and a lot of the information that just doesn't make a lot of sense, to help them just focus in on whatever it is that they need to do from a decision at that point in time. So that's what we're about and what we've been doing for the last few weeks at this point in time. But I think our biggest question that we've just been getting is what in the world do I do, right? No dentist probably has ever thought to themselves, well, I'm in a dental practice and I'm going to be shut down, right? Unexpectedly, so quickly, out of nowhere. And how do I navigate that? What do I do? What are the things that I need to do to employ the tactics or the strategies, the tactical aspect of, now that I'm no longer seeing maybe a few patients a week from an emergency perspective, what do I do with my team? How in the world am I going to make my overhead, whatever remaining of my overhead for the next 6 to 8 weeks, foreseeably? What do I do with my debt that's outstanding? There's all of this discussion about financial relief packages and how in the world do I navigate what, these financial relief package options at this point in time? do I do this one first or that one first? If I do this one, can I have that one? All kinds of things that are just, I feel like a lot of confusion because of the rate in which things are changing and the rate in which things are being pushed out there into the world for us to digest and then try to make business decisions from. Does that make sense?
Yeah, it does. And on that note, Drew, I just unmuted everybody, so feel free, anyone, to chime in right with Drew's opening comments of just the mass. It is a headache of confusion out there with so many options and which options to do and which ones apply and which don't and how to go about them. Any questions for Drew right off the bat?
So I think one of the biggest questions that we're getting are, it's like, when does it make sense to apply for this loan or this loan? There's a lot of confusion about the types of loans, right? And so ultimately right now, what's available are one of two things: either an economic injury disaster loan, which is a SBA 7B loan that you get, it's between the SBA and the business owner, the borrower directly, right? That's one option that's out there. And that's really to be used for a 6 to 8 week period in order to just help supplement cash stores for business expenses such as rent, such as utilities, such as subscription services, such as your insurance, et cetera, and then and not to be used for payroll specifically. So segregate those dollars, use them for other things other than payroll at this point in time is really the key there. That's what we're recommending to our client base to focus on first and do first. So that way you have that, what we recommend is a 90 days, access to 90 days capital to begin with. So 45 days physical cash on hand, and then line of credit for another 45 days to equal to a 90 days. So really just using the 7B, the economic injury disaster loan, as a supplement to what they hopefully already have on hand to be able to navigate a very lowered overhead over the next 6 to 8 weeks. Because we've laid off our team, right? That was one of the first things we did. So they're on unemployment where they should be because our businesses are closed. We've contacted our lenders. Our lenders, are typically saying 3 to 6 months of payment deferment in most cases. Every now and again, you'll see one that says, okay, you have to pay the interest only, but in most cases, it's been a 3 to 6 month complete payment deferment. We've reached out to our landlords and asked the same. Can we have a rent deferment? Can I add it onto the back end of my lease? Smaller landlords, a lot of times are saying, okay, we understand. They work with them. Larger landlords, corporate landlords are saying, yeah, tough luck, not a chance. I don't know what to tell you. And so you can get creative, right? Maybe reach out to the landlord and say, hey, okay, if this is going to be a 3-month deal, can we add for every month that we add on and we move from the front end to the back end? Can we make it 2 on the back end, right? You just got to think outside the box and figure out a win-win scenario if you're having a landlord that's not working with you, right? And so if we've got our biggest expenses, payroll, debt, and facilities taken care of, now what we're left with is it's our variable costs, right? So our dental supplies and lab fees that are not going to be very much while we're seeing just emergent patients. It's going to be our subscription services that are there in order to keep our doors open and the things we have contracts for. It's going to be our insurance that we're going to need to pay for the entire 12 months, whether we're open or closed at that point in time, right? A health insurance, et cetera. And so really it diminishes the use of what you need from an overhead perspective. And so you should be able to weather the storm if you had normal 45 days cash on hand, that should extend that out to probably 90 or 120 days cash on hand when you figure out and factor in what your true overhead is while your office is closed for the next few days. And so putting together an emergency cash flow manager, figuring out what you actually need, and then you can decide, okay, does it make sense to apply for the economic injury disaster loan or not? The answer is yes. In almost every case, it doesn't hurt to at least try and see what you get, because in an unknown situation like this, there's no need to not have more cash on hand, essentially, right? Cash is king. The bigger the war chest of cash we could possibly have, the better off we're going to be, the more staying power we're going to have, and the better we're going to sleep at night, really. It's going to ease that anxiety as much as humanly possible.
Yeah. Hey, Drew, right off the bat, on that point, here's a question that came in. My biggest question is when to apply for the PPP so that I can actually use it when our doors open back up, and how big is my risk for not hurrying and applying?
Yeah, that's a fantastic question. So what we've talked about so far is getting that like next 6 to 8 weeks, right, while the offices are closed. And then ideally, you'd receive your paycheck protection loan, right, that you filed through the bank, through your bank, filed through them, applied through them, receive that sometime between the date that your office opens and your first payroll date at that point, in order to make sure you have plenty of capital for payroll, in order to make sure that you can actually utilize the 8 weeks of forgiveness, right? And the only economic benefit, in this entire thing, to be able to utilize that. And that's a fantastic question. When do I apply in order to time that? Well, there's a lot of moving variables there, right? One, we don't know when the offices are going to be back open. Two, we don't know how fast the banks are going to be processing these loans, and the SBA is going to be processing the approvals of these loans at the point in time in which you apply. Three, we don't know we don't know truly when the $349 billion is going to be all spoken for. We don't know if Mitch McConnell is going to get his way and that we're going to see another $251 billion to bring it to a total of $600 billion. That's going to change a lot of things for a lot of people from a decision-making process. So what I do know is that when you look at the economic benefit to take it now and sit on it, it's absolutely zero. When you look at the worst case scenario of you miss out on the money, right, and you're not able to get it, then at least there's a tax credit that you can take on the back end that would have some economic benefit. And so if I think about best and worst case scenarios, best case scenario is I get the money and I get it exactly when I need it, and I use it for its intents and purposes, and I get the maximum amount of loan forgiveness that I can possibly get. And by doing that, then I make up for some of the time that, that we'll call it 6 to 10 weeks that my office has been closed down. Let's hope, make up for some of that from an economic value perspective. But worst case scenario, then, I don't really make up a significant amount of that from an economic perspective, but at least I have a consolation prize of getting some dollars, up to $5,000 per employee, and a tax credit that's fully refundable. And it's not an apples to apples, right? It's not the exact same amount, but at least it's something, right? And you don't take the risk of having the money now, misusing the funds. You don't have to take the risk of having the money now and using the funds for what the intents and purposes are, but not following all the rules and employing your employees all the way out to June 30th in order to hit that tripwire time frame. And by doing that, you'll end up, you could end up when you file your forgiveness application, which again, we don't know what the rules are 100%. We're going to see, just like every day, we're seeing the SBA change the rules on the front end. I almost guarantee you that every day we're going to see them changing the rules on the back end as well. And we don't know what that forgiveness aspect is going to look like. So the worst case scenario would be you get the money now, you spend it on your team members to try and get the the forgiveness aspect of it when they should be on unemployment. And then you apply for forgiveness and you don't get the forgiveness. So now you've paid employees that should be home or should be on unemployment while they're home. You're on the hook for a loan that you're going to have to pay back in 24 months. And you got absolutely zero benefit, because once you apply and you have and you close and you secure a paycheck protection loan, then you cannot take the tax credit for up to $5,000 per employee. So that is like worst catastrophic possible scenario.
Yeah. And Drew, here's just a comment, which I think is on every business owner's mind in America, is that the PPP is running out quickly and we haven't heard of anyone getting the money yet. And the banks are limited to what they have to loan out. Wells Fargo at 1 billion, Bank of America at 2. Wells kind of going through, both Wells and Bank of America going through some different feedback to the country on what they're providing overall. What do you want to share regarding those points?
Yeah, I think ultimately Mitch McConnell this morning on Fox had said, like, look, right now, and who knows where he's getting these figures, because I can't find anywhere. No banker that I know has any clue where you can track this. Obviously, he has security clearance and knows people in much higher places than any of us do, but said that 30% of the funds are spoken for, right, at the SBA right now, which there's probably a massive push early. So honestly, theoretically speaking, we may see that slow down, that velocity slow down for people to apply at this point in time. We're seeing smaller banks go through the process faster than big banks, right? That's so your Bank of America, your Wells, your PNCs are not as nimble. They're not doing as well as your local banks and your regional banks. We have a client that is open for about 50% capacity right now, just due to emergencies. And so it actually made sense for them to apply at this point in time. So we went ahead and helped them through that process. Within 4 hours, the local bank that they work with had the SBA authorization, the E-Tran, in their hands, saying that, look, these dollars are now earmarked for you, and so they're yours, absolutely going to be yours. But the banks don't, they don't have loan documents prepared at this point in time. They have no, so on Tuesday night, the SBA provided further guidance that said, okay, banks, once you receive the authorization, the approval from the SBA, you now have 10 days to get that money out to the person that's closing. The first disbursement has to be within 10 days. So in the next 10 days, I think we're going to start seeing a tremendous amount of the money, leaving the banks out there. Banks are throwing together their loan docs, because one of the other FAQs is banks can use their own loan docs. They don't have to wait on the SBA to use their loan docs. So we'll start seeing some movement here pretty quick. And it'll be interesting to see what happens with, the dollar value of, one, if it gets increased to 600 billion, and two, how fast it continues to leave the coffers, as like Wells Fargo, Bank of America, PNC are processing all of their loans with the SBA, because they can't do them in bulk. They have to do them individually, one at a time, just like the small local bank does, which is why the local bank is doing it better and faster. Because there's less volume, right, ultimately.
Yeah.
So, there's no crystal ball, unfortunately. I wish I could say there was. There is no crystal ball, though.
I've heard from a couple people who have just opened accounts in different banks due to your point right there, Drew. If they were at Wells, they opened up even a credit union or a different smaller one, just for the fact of a quicker return, and almost probably even making a little bit more of a relationship with somebody there than they would have a chance at a Wells, unless they have a designated banker at a Wells or BOA or
right.
Yeah.
Right. And Wells, didn't let anybody know that they had a lending cap based on their, previous indiscretions that, so they got their hands slapped, right? Is why they had their lending cap with the federal regulators. And so they didn't let anybody know, that any of their customers know that this was the case. Nobody thought about it. And so that's why they got shut off at a period of time. I think it was like, late in the night Friday, maybe. By that point in time, they couldn't take any more applications because they already had enough to hit their cap. But I think it was on Tuesday or earlier this week, at any point in time, the regulators finally did say, okay, you guys can do more. So Wells is actually back in it. So if you have an account at Wells, you don't have to be concerned at this point in time that you can't apply there, can't submit your application there when it's time for you to submit your application, whatever time that is that you deem for your business.
Yeah,
that was caused a lot of anxiety earlier and a lot of worry earlier in the week, and luckily that's been solved at this point in time.
Yeah, good feedback there. Let's see. I'm going to take everyone off mute here just to open up and ask any questions to Drew. We've got a number of you on here, and some of the questions have been typed in. All good. Anyone want to open up with some additional questions to Drew?
Yeah, I think a lot of people are concerned with money running out, and if you look at worst case scenario, the money runs out and you're able to get utilize the tax credit aspect. It's not as an ideal scenario, but at least you're not stuck with nothing, whatsoever. unlike taking the money now and you receive the money now, at least you've got working capital, right, that you could use once you open, but you have to use it for its intents and purposes. You cannot just use it for whatever you want. You have to use it for what it's used for. Otherwise, you can open up for big trouble if you use it for other things. So,
yeah, good point there. Here's a question for you, Drew. Can you go into the tax credit in a little more detail that you're talking about right now?
Yeah, fantastic. Yeah, fantastic question. So ultimately, what the employee retention tax credit is you can pay you get a tax credit for up to 50% of wages paid in a particular quarter, and there's some revenue requirements. Your revenue has to be a certain percentage less than the same quarter in a prior year, and based on that, up to a 50% of wages paid in that quarter per employee, and with a maximum of a $5,000 tax credit, essentially. So if you pay somebody 10 grand in a quarter, as an example, this quarter, where your office is closed for 6 weeks, 8 weeks, 10 weeks, you're going to meet the revenue requirements for sure. And then it's a matter of from there, okay, if you've paid somebody up to 10 grand, now you can have a $5,000 tax credit. That's a fully refundable tax credit with your quarterly payroll tax return. So there is some benefit there, truly is some benefit there. That's better than absolutely nothing from an economic benefit perspective.
Yeah, that's great feedback, Drew.
So, I think that's everybody says and wants to know when is the best time to apply. And that's just, it's going to be a case-by-case basis. Every business owner is going to have to make their own decision. All you can do is try and be as educated as possible as to the risks and rewards. What are the worst case possible scenarios that you can run into? And then make your decision based on that.
Good feedback. Any other questions that while I have everybody just taking you off mute here and open the floor to anybody else. This has been great information, Drew. Here's another question for you. My employees want to apply for unemployment benefit. What's your recommendation, first off? Any conflicts with the loans? And then can the owner of the practice apply for unemployment as well? These are really good questions. This is a good one.
Yeah, fantastic question. Thank you so much. So yes, the employees absolutely could apply, assuming that either they're laid off, they're not working, they're not being paid as much in some way, shape, or form.
Hey, Andrew, and one thing on that, correct me if I'm wrong, but you can also apply for the difference. So let's say you guys have an employee that is working half the amount of time. Is it not such that you can apply for unemployment for the difference? If you're still paying them a little bit, you can apply for the difference of unemployment as well.
Not necessarily the difference, but if they're working reduced. So so what I was saying is that if they're laid off, if they're not working, if they've been furloughed, or if they have reduced hours, right? That's the kind of the fourth caveat there. Anytime that their income is diminished below a certain point, then they could certainly apply. And if they are working at all in any given week, that they have to then go. Essentially, they then have to go back every single week. They have to essentially reapply effectively by saying, here's how much I worked last week. Here's how much I was paid. Yes, I'm still available for work, right, et cetera, but I'm not working, or I'm not working as much. And then there's certain thresholds that's going to be different by every state on how much that employee can be paid in a given week. And it's going to be a percentage of their weekly benefit. And that's going to depend on every single state's going to be different. And so they could be working less, right, and still be eligible for unemployment, but they have to be working. It's going to be a significantly less that they have to be working in order to be eligible for unemployment. But absolutely, like one of the very first recommendations we had to our client base was guys, your offices are closed. Like, we've got to lay off the team. We've got to conserve capital, et cetera, et cetera. They'd apply for unemployment as soon as they meet the requirements, the test, to be able to do so. So yes, absolutely they should. There's not going to be any conflict with any kind of loans or any issues with loans. The 7B loan, the 7A loan, the EIDL loan or the PPP loan, no issues with there whatsoever for either the employees or the doctor. And the owner of the practice could absolutely apply for unemployment. And so the old rules, right, ultimately up before the CARES Act, if you're an employee of your corporation, because your practice is a corporation, if you were an employee, then you could apply without any issue because you're an employee, you've been paying into the state fund as an employee, in most states anyway, as an employee. Now, the CARES Act basically came in and they said, okay, states, in order to receive the additional federal funding, you're going to have to relax a couple of different requirements. The two primary ones that are important are, one, the time frame. So there's no waiting period any longer. They had to relax the waiting period, and so that way the employees could apply and be eligible immediately, including the owner doctor. And two, also made self-employed people eligible for unemployment as well, which in that case would be self-employed is going to be the owner of a single member LLC filing as a sole proprietor, a sole proprietor dentist, so filing on a Schedule C on your personal tax return, and an individual partner of a partnership. Those are all considered self-employed people when you're filling out the application, and they are absolutely eligible at this point in time, thanks to the CARES Act.
Yeah.
What we will say is that we've seen every state lag behind and not fully implement the changes that need to be implemented in order for it to take effect. But regardless, the unemployment can be retroactively dated. The pandemic supplement uninsurance assistance can also be retroactively received. And so it's just a matter of eventually the states will get it in place. They'll eventually figure it out. They'll eventually start getting the funding out properly. And right now, unfortunately, the only thing we can do is hurry up and wait.
Yeah. You answered that really, really well, Drew. Thank you.
Yeah, absolutely. My pleasure.
Good. Man, we've had a lot of great questions, a lot of great feedback from Drew today. Let me start to kind of wrap up what we have done today, as well as then answer questions as I start to kind of talk through the closings here. Let me ask this question, Drew, that came through. If the owner applies for unemployment and qualifies, are we allowed to continue to pay ourselves personally through owner distributions? Obviously, we can't W-2 ourselves anymore, right? So
right, yeah, you can't be on payroll specifically, right? Absolutely not. And so the shareholder distribution, right? Assuming you're an S corporation, a shareholder distribution comes from past profits, right? And so you're both a shareholder, an owner of a corporation, and you're an employee. You wear two different hats essentially. So you absolutely cannot do the W-2 anymore while your office is closed. You're shut down, right? But from a shareholder distribution can be from previous profits, right? So it has nothing to do with working this week, earning this week, anything like that.
Yeah. Great question. Great answer, Drew. I want to just remind everybody, and feel free to continue asking questions, sending them in as I start to talk here a little bit more about Drew and Engage Advisors. Drew and Engage Advisors is a longtime resource partner of the Crown Council. And so Drew is someone that we know personally and as a trusted Crown Council resource partner, one that you can reach out to, one that we will provide information, one that you see, at our events. And so he would invite you to do so. And let me ask another question to you here, Drew, that just came in. How can we get the employees back to work if they have good, if they have a
right?
good unemployment benefit. Yeah.
Yeah, so ultimately the challenge that Senator Lindsey Graham has actually had said yesterday was that in South Carolina, somebody on unemployment was now making like $24 an hour, and in Texas they were now making $28 an hour. So they're like, so what we did is we
Right.
incentivized people to not go back to work. But the challenge is that they may not be happy about it, but as soon as your office is back open and you've offered them to come back to work and given them the job, offer them the job, and they decline it, then they're no longer eligible for unemployment at that point in time.
Right. Yeah. That is the caveat to the increase in pay for the short amount of time.
Correct, absolutely. And I couldn't believe it. Whenever I thought for sure when it originally came out, I thought for sure there was no way they're just adding the $600 right on top. And yeah, sure enough, it's right on top. So it's quite a difference for some people in your office, especially your clinical assistants and front office folks, and your hygienists are not going to be happy about it, but your clinical assistants, your front office folks are. So
yeah, right. Yeah, great point. Can you go over the worst case scenario for getting the PPP loan and not being able to maximize the use of those funds again?
yes, absolutely. So really the worst case scenario I could probably get into would be that you get the funds, right? You apply now, you get the funds in a week, right? And so by 4/15, we'll call it. So on April 15th, you have received your funds, and then you want to try and maximize the forgiveness, right? So what you do at that point in time is you say, okay, April 15th is the kickoff, the start of my 8-week period, my 8-week forgiveness period for dollars that are eligible costs, right? That are going to be on payroll, eligible payroll costs, eligible rent, eligible utilities, eligible mortgage interest. And so worst case scenario is you go through that period and you spend the money, right? And your office is closed. And say we're closed through July, as an example. And so your office is closed, you go through, you spend the money in order to have the loan be forgiven, in order to pay your employees, because you want to make sure that your hygienists who are not making enough based on the unemployment get their compensation and get to where they need to be. Well, so you believe you've met all the requirements, but we don't know exactly what all the requirements are precisely because the SBA hasn't provided all the guidance and all the information about that yet. And so when your office is closed and you're spending the money believing that you're doing what you need to do, but you may or may not be, but come, after the 8-week period, you have to then apply for forgiveness. And when you apply for forgiveness and you submit all the information on an application that hasn't been developed yet, and you submit it to the bank says, yep, it looks good. They submit it to the SBA. The SBA then has 60 days to respond back to you and let the bank know whether or not they get the credit, whether or not they get the forgiveness aspect or not, right? Whether or not your loan's going to be forgiven. And you could find out that because you didn't continue to pay your employees from June 15th through June 30, because your office was closed, that suddenly, okay, you didn't meet all the requirements, and now you didn't meet the tripwire, and now you owe the money in a 24-month period for that loan that you took out to pay the employees, to pay your rent, to pay your utilities in that period of time. That, in my mind, that's the absolute worst case scenario you probably could be on.
Yeah. That's a good answer. Thanks, Drew. Here's one more for you. This is just recent. A few days ago, the ADA asked all dentists to appeal the newer policy that small businesses appeal the newer policy. The newer policy that small businesses can only be eligible for one loan, either the EIDL or the PPP. Is that still so? And any update about that?
Yeah, it's a fantastic question. So I actually spent the Saturday morning, talking with Mike Graham and Megan over at the ADA's lobbying group, trying to get them to understand, like, guys, this is a call to action that is probably overkill on what needs to be done. The language that you're wanting to use here is way too strong, and it's not that big of a deal. What their issue is that they said, well, when you read the language, It doesn't specifically state that you can have both in the interim final rule, which is the playbook that's provided from the SBA to the banks, but it also doesn't specifically state that you can't, right? So what their issue was is like, well, everywhere says that it's meant to be able to have both, but in here it doesn't specifically state that you can. So therefore, like, oh, you can. And that's where they went into the, unfortunately, the email driving, trying to drive people by fear into doing something in order to get it to specific, to get the SBA to change the language or provide additional guidance that says, yes, you absolutely can have both, which happened. They got it right, but unfortunately, it caused a whole bunch of concern and issue over the weekend, right? So our phones were blowing up, our emails, text messages were blowing up. Like, what do you mean I can't have both? The ADA just said I can have both, and or I can't have both. I'm like, no, actually, unfortunately, the ADA is not right. But that just is what it is. They did get what they want, right, in terms of specific clarification, but it didn't say that you couldn't either. So that's the challenge that we live in.
Yeah. Thank you, Drew. Great answers and great questions. Again, Drew Hinrich here is available, and we want to give him props for being on with us today. And for everybody listening, just know that this has been recorded, and it's going to be shared with you on the Crown Council email network. So everything that Drew has answered and shared, this recording is going to be shared. We have time for one more question, Drew. This is the last question, and it is, if you qualify for unemployment for yourself as the dentist, if you qualify for unemployment, okay, can you use PPP?
Yeah, absolutely. So you have the unemployment now while you're not working and you're not being paid, as either a team member, essentially, right, an employee of your corporation, or as a self-employed individual. Either way now, after the CARES Act, and it in no way, shape, or form prohibits you from utilizing the PPP funds for your payroll and receiving the debt forgiveness, assuming that you follow all the parameters that are necessary to receive it and the time frame that you receive it. You can't have both unemployment now and pay yourself wages with the PPP funds now at the same time, but you can have unemployment now, use the PPP funds in order to supplement your income and pay your wage, a supplemental portion of your wages once your office opens back up to.
It's great. Great answer, Drew. Thanks everybody for joining us. And again, we want to say thanks to Drew and Engage Advisors for taking the time to be on. This entire Q&A has been recorded and will be shared with the Crown Council Network. And Drew is always available and ready to take on further questions and work with the Crown Council members. So Drew, we appreciate you and your time.
Happy to help. Thank you so much for putting this together.
Yeah. Thank you everyone for joining us, and we'll see you very soon on the daily live podcasts from the Crown Council. Take care, everyone. Thanks a lot, Drew.
All right. Thank you. Bye-bye.